What's up, guys? Let's see what happened with the price of Bitcoin. If you remember, last time we were looking at this descending wedge, and I kind of anticipated the breakout of this wedge to the upside. At least statistically it happens more often, and indeed it happened. We didn't go exactly to 38.2% of Fibonacci by Fibonacci, but still a little bit higher than that, so it was something like $8,200 max, but still we broke to the upside. The volume is not that great, so I wouldn't consider this as a massive like reversal of this trend. Maybe just a relief rally, which happens after this downtrend, at least this short local downtrend. And maybe already right now we have a kind of a end of this move, because we have this green reversal 9 on the TD sequential indicator. We also have a very high oscillators value like stochastic RSI on a 4 hours time frame, so this is quite important right now. And at the same time we might already have this drop to almost $8,500, $8,550 actually. So probably we might see continuation of the rise still, despite of those bearish indicators, bearish signals. And I don't really think that we will be able to go too far. Still, it is a bearish trend until we'll go to something like $9,600, $9,900. Of course, if we'll continue to move up and make a new high, although it could be a bull trap, but I would probably consider this as a short-term, at least short-term bullish trend. But maybe we will not make a new high above $9,200, but as I said, we might go something like this to the area above the previous high and collect the liquidity here, and then we'll continue to drop. The fact that it is actually very possible, you can look at the same situation which we had after the rise from $7,300 to above $10,000, when we had the similar rise. Here we had the similar rise, and also we had a kind of a bull trap over here, but then we dropped below the baseline of the Bollinger Bands on a daily time frame. Exactly what happened here. We also dropped below it, and then again we moved above the Bollinger Bands baseline, and the same happened here, but we didn't hold above the baseline, and then we dropped, and you see what happened after that. So the point is, we still can basically in principle repeat, or at least almost repeat, the same situation we had here, but in order to invalidate this, we at least should hold above the baseline. And if we'll not be able to, then yeah, the same thing with funding, which is positive for a while. We still have more chance to continue to follow this downtrend than to have a reversal. You know, funding is a very, very big thing recently. But unfortunately, right now we can't be more or less certain, as you see, but we will of course observe and try to act accordingly. Until then, I would like to cover this thing which was pointed out by many people on Twitter and Telegram. You see, there's a difference between this data which we can get from Blockchain Whispers and the recent indicator, the recent statistics which we can get from Binance. And this statistics is longs to short ratio, and similarly here we have longs and shorts. But you see the numbers are very different. So here, for example, we have 33%, 66%, and here we have 46 and 53. And people are wondering why it is so, why it is different, and so on. So actually, the data which is presented here is different. So you see here, this is Binance Bitcoin order book, buys and sells. So we have buys in the order book 33%, shorts 66%, while here we have a long to short ratio where long account is account with a net long position and short account is account with a net short position. Of course, the percentage is the net long to overall number of accounts and net shorts to overall number of accounts. And then long to short ratio is long to short number of accounts. And that is why we basically here have the orders which already made. So this is not the order book. Here we have the order book basically, and here we have the already orders, actually not the orders, the accounts which have net long or short. So how can we use it actually? It's interesting that the data, although it is different, it still can point out to the same in the same manner. So you see, as you can imagine, there is so-called dumb money and smart money on the market. And apparently the majority of the players out there, they don't have enough skills and experience. They usually lose during trading, right? And the number of accounts which could be associated with this type of the trader is greatly, like, much more than the number of accounts which are profitable, maybe like 9-1 or something, 95%. And apparently this indicator is basically, because it's based on the number of accounts, it reflects the number of those so-called quote-unquote dumb money trading and losing money. So basically, which means is that let's look at some bigger time frame. For example, over here, now let's say over here we have the short 37% and long 62%, which means that the majority of people went long, and the very few of them, like not the very few, but the third maybe of all the accounts went short. But the market, as you know, usually goes against this crowd, which means that probably the price around this point should go lower in order to liquidate all the long positions or trigger the stop orders. At the same time, when the a relative value of this long to short ratio is low, when the number of shorts here is almost equal to the number of longs, when again on the average basis it means that there's a lot of the shorts here, then the price should go higher at around this point. And again, in order to liquidate those shorts or force them to close by the stop orders. So this is pretty much like the sentiment indicator, and it works pretty well. Although the shortest time frame is 5 minutes, so it's not exactly the best in terms of like reacting to the market, but you still can get some information from that. And on this data, like this order book buys versus sells, apparently it is different. So what you can get from here is that right now, for example, since the majority of those players out there trading shorts, it means that if the price will go lower, those orders will be triggered. And apparently, if the price will continue to go lower, then those shorts will be in profit. And it usually doesn't happen. Instead of that, what should happen is that the price should go higher, where and then those shorts could not be triggered, but then they would have to switch to longs, because again, this dumb money usually tends to buy high and sell low. So as soon as the price goes higher and reaches a certain area, like maybe the local high, then those shorts will be flipped to longs, and that would be the point where the price should go lower. So again, this is the different data you see here, but still both of the Blockchain Whispers data and Binance indicator can be used in a pretty much similar manner, so you can see like what to expect from the price action based on the number of shorts and longs, either in the order book or already in the opened positions for the majority of the accounts. So I hope now that it is less confusing, and you could use it for your own purpose. And for today, that is it, guys. Let's see what happened with the price. I will keep you updated, and thank you for watching.